Welcome. We are back. Another unscheduled time for the stream. So hopefully some people show up. I don't know. So it's the best I can do for right now. But we are back. And it was a crazy day. Not just for the market, but for the whole entire world. We're going to talk about everything. And yeah, we'll get to it. I think we're going to start off with crypto, just talk about the technicals, and then I'll talk about my thoughts on Ukraine, the overall market, individual stocks. I mean, from a technical standpoint, there's so much to talk about after a day like today. Fisker was up 13%, CLOV was up 22%, DraftKings was up 11%, SPY itself had like a 4% run from the open to the close. The ARK ETF was up 8% today, and this all happened while the Russian index was down about 40%. It almost halved in one day. So it's just craziness going on. We're going to talk about everything. Currently, futures are slightly red. They were actually more red before, and they've bounced back a little bit. So let's get started with crypto, and then we'll talk about all that. But yeah, just to start off with Bitcoin, very interesting. It sold off all the way down to 34K yesterday with when Russia started invading Ukraine. And you've got a very big bounce back, pretty close to a pin bar. It's not, I don't think it's a textbook bullish pin bar, but very similar psychology. And also, I mean, if we're just looking at the candle body, despite the wick down and the wick up, you do have a bullish engulfing candle on Bitcoin, which is very interesting. So that's what you've got on the daily. On the 4 hour, maybe it's testing a little bit of a breakout of this down sloping channel. There's really not much to talk about apart from that. I think really, if your low from yesterday holds, you could be set up. If your low doesn't hold, it's probably stop is going to get hit. I think it's that simple for Bitcoin. Maybe it's a type 1, type 2 move off the PCZ of this bullish shark. I hope it is, but we will see in time. One thing you do have, though, is potential hidden bullish divergence. We actually saw a lot of hidden bearish divergence, not on Bitcoin because it made a higher high, but on like Ethereum and Litecoin and a bunch of other coins had hidden bearish divergence. I mean, we could take a look at Ethereum. You could see it had this hidden bearish divergence, and that that's been playing out, and now it's bouncing a little bit. It's back above the supply line. It was under it for a little bit last night. You don't have any divergence because you made a higher low on price and the oscillator for Ethereum. So same thing here. What if this is the type 1 move that you had on January 24th, and then this could potentially be the type 2 move? It's all about, I mean, just looking at crypto in general, I think it's very clear, not just to me, but to everybody. It's like, if you can hold above yesterday's low, you're okay for right now. If you can't hold above yesterday's low, you're probably going to retest the January 24th low. I think that's how easy crypto is for the time being. So that's really it. Crude oil futures had a crazy spike all the way up to 100 for the first time, let's see, in a very long time. First time since like 2014. So in 8 years, it's crazy that was 8 years ago, but in 8 years, crude oil futures have not been this high. I'm sure many people here have seen what gas prices look like lately. And yeah, so let's just recap everything as far as I know. I'm not a news source, and don't use me as a news source. I'm just giving my own interpretation of everything. So I just want to say that first. But last night, Putin originally said that they were going to be doing like a special military operation in some city that starts with a D in Ukraine. It's like DO something. Somebody help me out in the chat. They're going to do like a special military operation. I think that's the word to use. And then it pretty much turned into like a full launch invasion. They attacked multiple cities. And even like just a few hours before Putin had the emergency address, I forgot who it was, but somebody in somebody from the USA, like in the political ladder, said that they did believe that Russia was going to invade Ukraine last night, like hours before it happened. And yeah, they started launching missiles, it seems, and there's been ground attacks. It's been like a full thing. I'm sure a lot of you know more than me about the whole entire situation, but I was watching the news for like 3 or 4 hours last night, and it was just horrifying to see that. So super tragic. Anybody who's affected by this, I mean, I feel like everybody is affected by this, but anybody who has family there, I wish the best for you, your family, and I hope, I said earlier in the Discord, but I hope we could find a safe way out of this, although it's definitely not safe right now, which is just it sucks. It sucks that we're in that world in 2022. And yeah, it looks like also Belarus invaded with Russia yesterday. And then we have the talks with, NATO, I think it's called Article 5 or something, where it's, every country that's in NATO, if another country attacks one of those countries, all countries have to help defend it. And you're seeing sanctions in terms of defense. I know the US has provided funds for, I believe, military equipment over the past month or so to Ukraine, but you're basically seeing Biden choosing the route of financial sanctions. I don't exactly, he said limiting Russia's access, I believe. He said that not just Biden, but they had the G7, meeting today, that multiple countries along, with Europe as well, are trying to limit Russia's access to like the dollar, the euro, and one other currency I forgot. And then there was a whole thing about, what's it called? Let me look this up really quickly. You have the whole thing with SWIFT, and people were expecting there to be some sort of sanction with SWIFT, which is like some sort of like international payment protocol thing. I've just been trying to keep up as best as I can. It's only been one day. I'm not like a master of any of these things. I'm just trying to share what I think I know. So a lot of people were hoping for them to do that, and just a lot of back and forth with the sanctions. And at this point, that's what we know. And there are some more recent reports about Kiev, I believe, which is the capital, if I'm not mistaken. I'm sorry if I mispronounced that. I'm taking a look. Mark Rebellion on Twitter just posted there's reportedly a Ukrainian fighter pilot who has taken out 6 Russian jets in air-to-air combat. He is being called the Ghost of Kiev. Somebody help me pronounce that. So, and then there's another city which one of like the leaders in Ukraine said that they're worried about like they're being attacked tonight on that city. So there's a lot going on. There's a lot of different moving pieces. And obviously that's been affecting the whole entire global market, from Russia to Europe to our market today. We were down a lot overnight on futures. I think NASDAQ futures were down like 3% at one point coming into today. And we can move over to the charts now and take a look at how everything is looking. But basically, we gapped down very, very harshly today. And we had an all-day rally across the board, and a very, very intense rally. I haven't really seen a rally like this intraday since probably like down over here just after the COVID crash, like on like days like this. Like this was a 7% day for the S&P. So overall today was only a 1.5% day for the S&P because it gapped down originally, but from the gap to the close, or from the open to the close, we did move up 4% intraday. So yeah, a lot is going on. When you get such a crazy move like that, it definitely changes things very, very, very quickly. So we're going to go over how things look as of right now, what I'm thinking about the overall market, and then I'll talk about a lot of different individual names. I mean, I shared a bunch of different charts on Twitter today. So many different things are going on. It's definitely a time where, there's obviously there's crazy things going on in the world, but I mean, that's being represented in the charts, and the immense fear you had in the morning to, I'm not really sure exactly. There's multiple catalysts as to why we saw an intraday rally, but it sets you up for a very interesting situation going into the next few days. So let's talk about it. We're going to start off with the daily charts on the major indices, starting with the S&P 500. I'm just going to give you the overall macro view of things, and I'm going to break it down a little bit further. We'll do bear case, bull case. Bear case, obviously everything going on with war, and that can be argued. There's actually been statistics that buying the dip on invasions, like I think like 4 out of 5 times of like major wars or invasions or battles that the US has somewhat been involved with or around, actually has worked like 4 out of 5 times, and it led to a rally in the next couple of weeks. So, you already had been selling off in the market for weeks leading up to this, and you obviously saw immense capitulation. I think the easiest way to look at today's morning or the open was capitulation. Go look up the definition of capitulation. You just saw like nothing. I mean, if you looked at something like Russian index and you watched the price action for like last night into this morning, it was literally just, there wasn't, what was a support? It just went down, 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 down. It was crazy. Like I'm talking about this move right over here, right? This is what capitulation looks like. And capitulation is typically what could lead to a very sharp bounce afterwards, or what's known as a dead cat bounce. Now, the only thing is, we're at a point where it's debatable whether this is a dead cat bounce or not. So let's take a look. All right, I didn't stream last night, but I did share 4 different charts on Twitter, and I pinged the Discord. They were pretty much just, it was just this chart, I think the QQQ, the ARKK, and the NASDAQ. I just shared how my charts were looking. And this morning when we opened right at this support, and I did share this support last night in that tweet. We opened right at it, and you bounced off of it. I drew this support based on this little gap fill from May 20th, and then also a candle low from April 20th of 2021, and even an open from April 12th, okay? So this 410 level, 411 level on the S&P 500, you opened right at it, and you just absolutely ran right off the open. And then I think around like 2 o'clock, Biden started speaking about the new sanctions that they were imposing on Russia with all the financial stuff. There are a lot of more questions to be asked. Biden has made it very clear that he does not foresee any troops from America going into Ukraine. So the markets reacted to that as well. There was a few different parts of that speech, or I'm not sure the best word to use for that, but the market did react to. Well, you actually pulled back for a little bit at first. I think it was right over here. It might have been over here, actually. This might have been the move. But intraday was crazy price action. If we just take everything out, this was your price action today. You gapped down and you just made higher lows and higher highs all day for the most part. So yeah, all right. I think I was originally supposed to get into like the bull and the bear case. I'm just starting with like the overall stuff with the war. It can create fear in the markets, and obviously, it's tough to try and look at charts and do all this stuff with everything going on in the world. So I'm just trying to explain it based on what the charts look like. So just please keep that in mind. So yeah, you obviously have immense fear, which there should be fear with everything going on, and the market reacted to that. But you also have a situation where the thing is, like, I hate saying things like this because it's so real, but also I have to talk about how the market is looking, and these are obvious things. So I'm trying my best to like separate the two, which I don't know, it just kind of feels, it's just tough for me to do, honestly. So just, again, everything I'm about to say, just take it for what it is. Like, everything that happened was horrible. I'm just showing you or interpreting how I think the market reacted to it. I'm not necessarily talking about the situation itself. I'm just talking about how the market reacted to the situation. But you did have multiple weeks of Biden and other officials in the US government talking about this happening. And there's a classic saying in the stock market where, you can have news-driven events and the opposite thing happens. There's one that's buy the rumors, sell the news, and then vice versa, right? So you were selling off on the rumors of this happening, and then when it finally happened, you started turning around. It's really the biggest word to use, I would say, is I don't know, this is really like making me, it's just hard to do this, honestly. But I'd say the best word, like the word was just in my head. Great. The market doesn't like, I don't know, I can't think right now. The market doesn't like uncertainty. It was that simple of a word, and I just couldn't get to it. But yeah, you had a lot of uncertainty for weeks, and then, as bad as it is, as bad as a real world event it is, once the uncertainty turned into a fact of an invasion actually happening, then you go from uncertainty and not knowing the situation to, wow, we know the situation. And that's how US investors decided to react. They bought stocks today, and that's just a fact. So yeah, I'm sure we had a lot of puts coming into today, a lot of shorts coming into today. That probably fueled the rally even more, because the puts had to be hedged by market makers and the shorts to an extent. I think we definitely saw a decent amount of a short squeeze today. I don't know the actual numbers, but I mean, just based off the last few days of price action, there was obviously a lot of shorting going on. And based off the type of move you saw today, you definitely had something apart from just buying propelling the prices of so many different stocks higher. Tesla was down like 8% at the open, and it closed up 5%. That is a crazy move. Fisker was down 4 or 5%. It closed up 13%. CLOV gapped up after earnings. It only gapped up like 7% this morning, and then it closed up 22%. Facebook went from like -5 to +5%. Apple was like red all day, then it closed up 1.5%. Like you saw red to green for so many different stocks, not just like a down 2% to up 1%. You saw like a down 5 to 10% to an up 5 to 10% type of move. Even DraftKings was down in the morning. It closed up 11%. I'm just looking through my watches right here. So that's the type of moves you got today. So yeah, overall for the market as a whole, you have this stuff with war going on. That creates a lot of volatility, obviously. You have everything with the Fed, and also if the Fed's going to change their stance now with everything going on in March, that's being debated, and probabilities for basis point for rate hikes are also changing. And you have inflation, so we're going to see how all this also affects inflation, not inflex, because now you're having sanctions, and now you're having things like oil soaring, like all these different all these different supply chains are being changed. You have, I was in a space last night, somebody said Russia controls like 40% of the world's palladium. Like so many different natural resources and trades are currently moving differently. You have the Russian currency plummeting against the dollar. You have so many different moving pieces with everything going on economically, or politically is becoming an economic event for the whole entire world. And that's where you are. And then also you have the fact that, we did just break major supports over the past 2 days, where technically yesterday into the close, we broke a major support across the board, and futures were down, and you were all the way down here. And at the open today, you were miles below your major make or break areas for the market. So if you cannot continue this rally into tomorrow, then you could consider this a retest of a breakdown, right? Remember we talked about break hook and goes to the upside, it's the same thing, but vice versa. It's to the downside. So the easiest way to look at this is, okay, if we cannot rally tomorrow, then you just flipped what was once your major support, okay, now over here, and over here into resistance, and that's not good. That would further confirm a market breakdown. However, some interesting variables did appear with the bounce today, and the fact that you got pretty oversold. That really moved the oscillators and also created, a lot of bullish engulfing candles across the market for a lot of individual names. And it's very, very interesting. So if you watch the streams often, we talk about this formula I've used to call market bottoms 4 or 5 times over the past year. Very, very simple, and it actually has worked every single time. And it's literally this. I'm sure a lot of you remember the circles I like drawing. It's high volume on the S&P 500 at your lower Bollinger Band. These red things are your Bollinger Bands. The lower line is the lower Bollinger Band. And every single time you've had a volume spike for the S&P 500 at your lower Bollinger Band, you have seen a market bottom in the past year, and potentially even longer, okay? Every single time without an exception. All right, and you got the same thing again. You pretty much went down to your lower Bollinger Band yesterday, which I was going to talk about if I was streaming last night, and you had relatively higher volume. You can draw a line here. Look at this orange line. You pretty much got up to that volume bar where you do see the market bounce. So you have that going for the market, and you also have now potential classic bullish divergence across the board. Okay, we had hidden bearish divergence, right? That's what we were talking about pretty much this whole entire week, the hidden bearish divergence everywhere, and that played out between the last 2 or 3 days, and now that's changing into potential classic bullish divergence, which is even more interesting. I don't even remember the last time the S&P showed it, because it's always been making higher lows, so you can't really get classic bullish divergence with a higher low. You need a lower low, so you really haven't had it like in a very, very long time on the daily. So this is the first time you're seeing that potentially in a while, and it's not just on the S&P 500. Same thing for the QQQ, potential classic bullish divergence, and it's on both oscillators, okay? This is called an edge, but at the same time, the edge can easily be invalidated if you are red tomorrow, maybe even Monday, because then you're retesting resistance or support as resistance, and then instead of the MACD waning towards green, it's going to start losing its, it's going to start gaining more negative momentum, and it's going to continue down red, and that's just going to be a continuation of the hidden bearish divergence. If that was a little bit confusing, watch the course. There's a video on divergence, but you're now getting that shift from bearish to bullish divergence for the overall market. Even on the 1-hour charts, you have classic bullish divergence currently confirmed and playing out across the board. Take a look at this. Not there, but on the Russell 2000 you have it as well. So a lot of classic bullish divergence. Classic bullish divergence implies a reversal to the upside. So you are seeing that appear. And then also you have a lot of daily charts that look just like this, because you gapped down a lot and you went up, 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 and up to close higher than yesterday's close, or yesterday's open, and you have a lot of bullish engulfing candles. And you know, so many times we've seen you get a bullish engulfing candle after a sell-off, like across the board in all the stocks, or a bullish hammer, or any sort of bullish candle that appears on almost all the stocks in the stock market at the same time, or at least like half of them, can lead to most people looking at the same exact candles and you getting a bounce afterwards. So that's how you look. It's you know, I know I've been saying it like all week, but it's still the same thing, because you were breaking down, you did sell off a lot, but the fact that you did rally up as much as you did today puts you back in the make or break area. So overall, we're still just back to where we were technically yesterday afternoon, which is crazy to think about because of what happened overnight. So now you're back in your make or break areas for the next few days. You sell off again, that's probably going to be a confirmation of a breakdown. And if you don't sell off like how you have been for the past few days, and you can at least go sideways or hopefully go up, then you have an invalidation of the breakdown, a spring back above support, and then you're gonna have confirmed classic bullish divergence for the overall market, and that could usher in a really, really big rally. So that's what you're dealing with right now. That's what the market looks like overall. On lower time frames, you're getting 1 hour channel breakouts with classic bullish divergence. Okay, QQQ, you don't really have a channel breakout, you're just in your channel. Russell, you already broke out and you're already rallying back up. You bounced off your same lows from January 28th on the Russell 2000 today. NASDAQ broke out of a channel, so across the board you're getting those, even on 5-minute charts. Remember those channels I had charted on Tuesday night, I believe? You finally broke out of those. You've been in these downsloping channels since last Wednesday when we had the FOMC minutes, and you're now out of your channels by far. You tried to break out of it. I think it was on Tuesday, and you really couldn't. Might have been Monday. No, Monday the market was closed, so on Tuesday. But yeah, you broke out of those. I mean, I've been showing these channels all week, so that's where you are for the market. And it looks like futures are now selling off a little bit. I'm not sure if any news came out. 1 minute ago, Market Rebellion reported, and they've done a pretty good job of reporting everything, but look it up yourself, go fact check yourself. But 1 minute ago, Market Rebellion says Taiwan has announced they will impose sanctions on Russia. So you're having multiple countries around the world doing that, and I don't know if there was any other news. I already told you about the air stuff going on earlier. Okay. All right, so that's really what you have for the overall market. I think the big level that's very easy to look at is 420 on the SPY. All right, 420, that's your low from January 24th. You close above that tomorrow, and that could be really good for next week. That's probably the big level, yeah. And then for the Russell 2000, your big level, I'd honestly say is right over here. We're gonna move this down. Your big level for the Russell 2000 is 187.84 on the daily. And here you can see the classic bullish divergence developing across the board. So those are all of your daily time frames for the overall market. Even on the 4 hour, you're breaking out of these like supply lines, the same ones I pretty much showed you on the 1 hour. And here we also have lower low dragons. I'm not a big fan of lower low dragons. I prefer equal or higher low dragons. But you kind of have this same formation on a lot of different large caps. Even the S&P looks very similar to this. And we can just draw it over here. So you have variables. Even on the 4 hour, I didn't even notice this until right now. Even on the 4 hour, you have potential classic bullish divergence. So this is the first time you're seeing an edge. I told you all for a while now that you're not really getting a bullish edge, and now this is the first time an edge is being created. I just don't know. I don't know how good the context is with everything going on. You know, if we were in a not so crazy time, I think it would be a very, very clear edge. And honestly, if there was no such thing as news, which is very stupid to ever say, I'm just saying, imagine there wasn't, and you just look, all you had was charts, like, I mean, these are what you look for based on my system. But again, the news can change all of that very, very, very quickly. So 1 hour, 4 hour in daily potential classic bullish divergence for the market. I have not seen that in a very, very long time. A very long time. just fixing all the stuff I've charted. So yeah, if our lows from today hold, I mean, this is an obvious statement, like no duh, if the lows from today hold, the bottom is in, but that's just how you got to look at it. Like, as cliche as it is, or just obvious as it is, it's the way that a trader can manage risk, and it's the way that you can look at the market. You do have potential classic bullish divergence across the board, not just on the indices, but on many individual stocks. You've got oversold. You're seeing 2-decade multiple lows for small caps. You're seeing pretty much, no, you are seeing the largest correction in the entire market, and large caps. Keep in mind, large caps especially since the COVID crash, because we already saw the market crash apart from large caps over the past year. So these are very interesting variables. This is the second time now that you're bouncing around these levels for the market in the past month. The first time was the end of January. Okay. And now we're at the end of February and we're doing the same exact thing. Obviously, very different situation though. So there you go. Those are your 4-hour charts for the market. We just went over the whole entire indices. Now we're going to talk about some other charts that I want to keep in mind, and then we're going to talk about some individual names. But overall, just to summarize everything, if you do sell off again between tomorrow and Monday, that could be a bearish retest of a breakdown that I talked about earlier in the week. And you did break down. Remember, you can break down, you can break out. That doesn't mean for sure you're going to go up or down next. It's something that happens. Okay, a breakout or breakdown is just breaking a level on a chart. What matters, and the trade talks about this all the time, is all that matters is what happens after the breakout or breakdown. A breakdown or a breakout by itself technically means nothing apart from a technical level being broken. The follow through price action is what you trade, is what gives you probability, is what confirms your moves. And you never got candle close confirmation, right? You did close pretty much right as testing your supports yesterday. You technically were, closing at your lowest levels of the year and months. But you never got a candle close confirmation, because even though you did gap down all the way to over here today, remember, when we're talking about breakouts and breakdowns for the market, all that matters is where the market closes, and you did close higher than you closed yesterday, which is very interesting to think about. So that's where you're at. Apart from the indices, the VIX went right up to 37. I've had this level charted for a long time. It's similar to your highs at the end of January, and you pulled back all the way over there to fill your gaps. So just like the market filled the upside gaps after gapping down this morning, the VIX did the opposite. And let's see if you got bearish divergence. No, actually, yes, you have potential 4-hour classic bearish divergence. So again, now you're getting, this is the first time you're seeing this shift in a while, where you're now getting bearish divergence on the VIX, but bullish divergence for the market. So you're also going to be looking for the VIX to break down from this little trend line I just drew. Okay. The US 10-year, I think, bounced back, which is very interesting as well. So you were seeing this pullback over the last couple of weeks, or last week and this week, and today was a big bounce back day from 1.84, 1.85 all the way up to almost 2% at one point. And now you're back above the very important resistance level from 2019 after falling under it for a little bit. But you really never closed again. You never really closed multiple days under. You never really confirmed that breakdown back under the level. So it still could be looked at as a back test of this 2019 level breakout for the US 10-year. Apart from that, we have the Hang Seng Index, which is not open currently, but sold off even further. It's pretty much getting back down to its lows from January as well. So we'll see if there is some support there or not. Gold is soaring. I mean, had a crazy move higher, went all the way. If that's a real print, 1974 is your highest level since September of 2020, right before the elections. Crazy high volume. I mean, it makes sense. So gold is continuing higher. I try to tell you all over here how bullish it was looking. There's the move. And it started before all of this happened as well. I mean, this move's already been started since the beginning of December. And then obviously the Russian index got destroyed. Russian currency, the ruble, I believe it's called, got destroyed. And you actually, I mean, it's crazy to think about this, but you actually bounce off of a level, which, like, with everything going on in the world and in Russia specifically and in Ukraine, the chart led to where the Russian market bounced off of a line on a chart. Okay, think about that. Like, the news obviously is moving the markets, but the amount in which the market is moving was determined by technicals, if that makes sense. There's no coincidence why randomly you shifted from majority or major selling into major buying towards the end of the day for the Russian market. When you got down to this level, people were looking left on the chart. you did have a low here in 2016 and 2014, and you bounced off of it. So 608's, I guess, a new level on the daily chart. We take a look at the weekly. You can also see that it's come back down to this little support zone over here. Historically, you've not been under this since 2004. So the last three times you were at these levels, you had a major rally in the years after. It took years, but you have also never seen a major drop like this so quickly since 2008, which was the global financial crisis. So that's the Russian index. We saw, I mean, most stocks had very green days, but you also saw ammo stocks today go higher. This is POWW. This one up 9% today. Taking a look at this chart, and again, I'm not trying to, talk about profiting off stuff like this. Like, at the end of the day, that's what the market does. The market will take global events and people will trade it. And that's the fact of the matter. I'm sure there were people that bought a MMO today because of what's going on in Ukraine. That's how markets move. That's what markets are built upon. They're built upon news and things happening. As bad or as good as those news pieces can be, that's what moves markets, and that's what's happening on a lot of these names. So yeah, you're just breaking this down technically. You do have triple classic bullish divergence. I'm just trying to show you the facts again. I'm not trying to create any narrative or anything like that. You do have triple classic bullish divergence on this chart, kind of a potential dragon pattern with this double bottom over here. Another one is Big Five Sporting Goods. Same thing, classic bullish divergence. This was up 7% today, kind of back testing a support level historically from 2017. Bullish engulfing candle today. So you are seeing, different names doing these interesting things. You can see this previous resistance zone flipping into a support zone. So, I mean, another one, Smith & Wesson brand. I don't own any of these right now. I looked them up so I could talk about them on the stream. Maybe creating like a little bit of a wedge here, but same thing with the lower low on price, but less of a lower low on the MACD. So those are some ammo stocks. Just, bringing up gold and ammo stocks. That's what a lot of investors might be looking at with everything going on right now. Bitcoin is up 1% on the new day that started an hour and 23 minutes ago. So that's pretty much the overall breakdown. We're going to move into individual stocks now. But yeah, I just want to reiterate, I'm just trying to talk about what's on the charts, but what moved the charts today is a tragedy. And I said at the beginning of the stream, but seriously, I'm praying that there could be a safe and quick way out of this. There is no safety right now in Ukraine, unfortunately, but I hope, I don't know. There's only so much one can hope. At the end of the day, it's honestly horrible that we're in this world in 2022. So, I wish there's, peace. That's it. But, actions actually have to take place. I can hope and wish, but the actions have to take place, and hopefully those actions towards safety do take place. But yeah, so that's what happened today. We'll talk about some individual names now, and let's get started with, I shared a lot of charts on Twitter earlier today. One of them was Square, and I shared this on Twitter. 1 second. I'm just checking to see if there's any new news. Okay, so Square was actually down in the morning, rallied up to close with a bullish engulfing candle like a lot of other stocks today, and also back tested a high right before the COVID crash as support, and the 786 retrace from the COVID crash low to its all-time high. And Square did this earlier today, and then after hours, Square went from $95 to $112, so went up 18% after hours. So it's up in those areas. Big bounce there for Square. I'm just gonna talk about some charts that I was looking at today. Facebook hit the PCZ of a bullish cipher. It's not super textbook. I think this is supposed to be like a 1.414 max. It's 1.46, and then also this is a 1.37. It might have to be like a 1.618, but you do have relatively a 382 from X to B and a 786 from X to D, and it did in fact bounce 8%, 9% intraday off of that 786 retrace. It also filled the gap. We talked about this. I talked about this, I think, on my last stream. I brought up this harmonic and this gap fill at 197. It pretty much went down there a little bit lower, 191. It had a big bounce today. On the 4 hour, it even broke a supply line. On the 1 hour, Facebook is testing a breakout of this wedge it's been in since the major gap down after earnings with some classic bullish divergence. So Facebook is looking interesting. Apple is retesting its inflection zone over here pretty much from these highs, this low, this resistance, this low, retesting that. DraftKings, right where this, let me go on to lower time frames. Okay. Right over here, I shared calls on DraftKings with everybody in the Discord earlier this week. I think it was Tuesday. I shared calls with all of you in the Discord, just if you want to join, links in the description. And those calls at the high today were up 300% since that alert, which was the most recent alert in the Discord. So those went from 122 to like 488 in a few days. And what a crazy move DraftKings has made. And I told you all already, even on Tuesday night after the calls had already ran like a lot. I think they were up like 60% on Tuesday itself. And it closed I think it was somewhere over here. It closed right over, literally closed right over here. And I said, you know, don't be surprised if it keeps going. Definitely could have a lot left. And we talked about this gap fill, I believe, the 15-minute shark, and it pretty much, it made the move. Okay, I mean, look how technical that is. Hit the PCZ of a 15-minute shark, and then you ran up to the gap fill at $222 pretty much. So that's interesting. Another one on my watch list, Tesla. Now Tesla would be very interesting to me if it fell down to 622. I don't know if it's going to get there. It is retesting previous support to an extent as resistance. It's also still under the 200 moving average even after the rally today. But let's say Tesla were to sell off more, it gets, you know, even further down in this wedge, and Tesla were to fall to 622, which is also a support back from July 2021, and then you have like classic bullish divergence there. That would be such a crazy edge. But again, I don't know if it's going to get there in the first place. So that's another chart on my watch list. Peloton was another one I was looking at today. It's kind of created a new mini wedge after the longer wedge, and it's retesting its lows from January. So yeah, SDC, I think I showed you all this earlier in the week, how it hit this PCZ of somewhat an alternate bat, still in this long-term wedge. And let's talk about CLOV now. Okay, CLOV was up 22% today. I did tweet out yesterday before the earnings when CLOV was $2. Let me see if I could find it. When CLOV was $2 yesterday, I tweeted this out. CLOV was at the apex of a falling wedge on the weekly with classic bullish divergence and an oversold RSI. The price was 2. I said, I'm telling you factual variables on a chart because a lot of people complain whenever I share charts on CLOV at all. For whatever reason, they group me with other people that promise to squeeze, and I never even said, you know, every single week there's going to be a squeeze. We're not going to get into the rant that I've done too many times on this channel. But I was just sharing a chart, and I said earnings come first, which obviously they did. And then, yeah, CLOV earnings, we didn't really break it down, but we can kind of break it down right now. But even before we just talk about the earnings and whatnot, weekly chart, you're still showing this wedge. You're pretty much breaking out of this wedge on the weekly you've been in since June of last year when it squeezed up to all-time highs and then started falling. So this could be a trend change for CLOV. However, I've said this once before and it did not work out. So there's no certainty that it's going to be the bottom and it's in and you're going to run up back up to 6 like there's nothing. I truly hope it is, but remember, it's just a probability. And that's what I always have tried to say since day one. It's not a certainty. So you actually also now have triple classic bullish divergence on the daily. So a wedge breakout, triple classic bullish divergence on the daily on the MACD, classic bullish divergence on the RSI, classic bullish divergence on the weekly. And your first like good green candle, you had one over here, but this is a nicer candle. I mean, because this one had a higher wick up here. So if CLOV were to somehow close above $2.60 tomorrow, you could have a tweezer bottom on the weekly / bullish engulfing candle. That would be very interesting. That's like another 5% though, so we'll see. But there you go, that's CLOV on the chart. 4 hour, you're also testing a supply line breakout. You have a MACD crossover. These are good technical things. Obviously, it needed the earnings catalyst for this to even happen in the first place. So the earnings did obviously create the initial move, but it's helping the technicals, obviously, that you're seeing some sort of buying activity in the stock for the first time in a long time. So yeah, it went up to like 267 after hours yesterday. Then this morning came all the way back down to like $2.08. Like, I mean, we could just take a look at the open when everything gapped down, obviously. So like yesterday after earnings, it was like up here and then it gapped all the way down here to open, and then like the market just went up all day. consolidated in the afternoon and then kind of broke out of a little range towards the close. But earnings, just off the top of my head, they beat on revenue. Guidance was pretty good, but they did report a pretty big loss overall, which is a concern. But Clover Health said fourth quarter revenue increased 160% year over year to $432 million. Now, keep in mind, and this is something Mehdi, I know we were in a call, I think Lord Bogendorf was in that same call. I was talking about the market caps. I know the lump might have been there. But I was talking about the market caps of Fisker and CLOV and how they just got demolished. I'm just on Google. I'm not looking at Yahoo Finance or anything. Just really quickly, it says the market cap for CLOV is $1.16 billion, and just last quarter they did almost half of that in revenue. I saw somebody tweet that fact out, which is just, it's interesting to think about. I mean, it's a very different market cap than it was last June. But the company did report a quarterly net loss of $182 million. So they're making a lot in revenue. They're growing their revenue, but they're also increasing their spending with that. So you do have that. But Clover Health expects full year 2022 revenue to be in the range of $3 billion, which is pretty much 3x their market cap currently, or $3 billion to $3.4 billion. And Medicare Advantage memberships are expected to grow by 26% to 27% year over year. Adjusted operating expenses are expected to be between $330 and $345 million. So yeah, that's the earnings. Reaction was very nice. We'll see what happens. That is CLOV. And now we're going to talk about Fisker. I also tweeted this chart and shared this in the Discord yesterday. It was yesterday. Yes, it was. So, yeah, Fisker. I mean, the last two times it hit this support zone on the weekly, it ran all the way up to at least 20. The first time it went all the way up to 32. But you're back at the bottom of the range. So hopefully it bounces here and does the same exact thing again, but not the same exact. Hopefully it breaks to the top of the range and runs to a new all-time high eventually. But very interesting. And I forgot to even mention this, but you're getting this weekly hammer candle formation for Fisker. Across the board, if we have another green day tomorrow, you can get weekly bullish pin bars, which will be kind of the first bullish candle you've seen for the overall stock market since the first or the last week of January, which did lead to a nice rally in the beginning of this month. But you are seeing a lot of hammer candles being developed, pin bars being developed on the weekly time frame. Okay, keep that in mind, which is another very important thing you want to look for tomorrow. If you can see it either sideways action or continuation to the upside tomorrow, you're showing weekly bullish candles for the first time in a month, which would be nice. But back to Fisker, daily bullish engulfing candle. You were under the demand line I drew for a little bit, but you closed above it, and you filled this gap yesterday, I believe, and you actually closed just slightly, pretty much, I'd say, at the demand line. Let me clear this up a little bit. You pretty much closed at this supply line, not demand line. But again, what if it's like we were talking about Bitcoin, type 1 move and then potentially a type 2 move, double bottom off of this $10 area. It's not a textbook harmonic here, but it's close to one. In a sense, an alternate bat, but a few points are off. So yeah, Fisker, that's your analysis. BABA, this one closed cents above the stop today. Hopefully this can spring back above the 111 support, and that's literally it. There's no other analysis. Hopefully you can get back above that support. And that's pretty much my breakdown for everything today in the market. What a crazy day. Really interested to see how tomorrow goes, and just, before the market itself, I'm just wishing the best for the people in Ukraine. And yeah. So I haven't read the chat at all, but yeah, make sure to join the Discord, links in the description. AK says, think I read today's wild and trader swing has only happened 2 or 3 times in history. What's up, Keanu Trades? I don't know if you're still here. Mehdi joined the stream and then left the stream. Would you take action after bullish candle is formed or wait for next weekly candle to confirm? Me personally, if it confirms and holds tomorrow, not only does that confirm the weekly bullish candle, but then you're also confirming a reclaim of the support you broke. So I'd probably be bullish again on the market for the first time in a couple of weeks. So yeah, because remember, my breakdown of the market on this Friday, I believe. Yeah, on this Friday, my breakdown was I thought we are going to get a dead cat bounce for the first few days of last week up until the FOMC minutes, which we did. And then I thought we were going to get a pretty big sell-off, and that's what we did. I talked about this on stream, and this Friday in premium, I talked about this and shared my screenshot, and that's exactly what happened. Obviously, I did not expect this next part to happen right away like it did, but you did get the breakdown yesterday at the close, even before the invasion. So yeah, that was the price action. And bearish. If we hold this low and we start at least holding these areas in this inflection zone, I will turn bullish probably again. I mean, again, you have 1 hour chart breakouts, 1 hour, 4 hour, and daily potential classic bullish divergence. You got your same exact volume signal that we've seen for be or bottom like literally every single time for the past year when you hit the lower Bollinger Band on the daily. So from a technical standpoint, if you hold today's gains, I don't see a bearish argument if you hold today's gains. The bearish argument is if you lose today's gains and you close back under the inflection zones, then you're confirming a breakdown. So that's what creates the 50-50 short term, but it could easily, like literally tomorrow, turn into a confirmation of a spring back above support. So hopefully that answers your question. But yeah, that's how everything's looking. That's really it for tonight. I shared a bunch of charts on my Twitter earlier if you want to go check it out. That's twitter.com/championvibe. Make sure to check that out. Make sure you join the Discord. Hopefully you enjoyed the stream. And I hope that next time I'm live, we are closer to a solution to everything going on. And I hope that things get better and that people can be safe. All right, so thank you for watching the stream. Hit the like button, hit the subscribe button, join the Discord, links in the description, and I'll see you in the next stream. Have a good weekend. Peace out.